has gone out there. It's February 1st. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Exciting news, pretty close to official, but our CEO token, Curzio Equity Owners Token, will start trading on the tZERO platform early next week. Holy cow, what a journey. Ups and downs. Crazy since 2017-18. Tried to launch one of the first ever security tokens, and the goal was always to get it traded on a US-based platform. So a lot of you know our token was trading on the Merge Exchange, and that's an international exchange, MERJ, and that's located in the Seychelles. Great team over there, great guys. And we were trading on that platform, I think, close to a year, maybe 10 months or so. And until like the last 2 or 3 months from moving to that exchange, U.S. investors, so any of you that wanted to buy our token, had to do so by wiring money to the Seychelles, which wiring money is not the easiest thing. I mean, some people do. If you're a credit investor, you do it to get a lot of private deals or whatever, you know, mortgages, stuff like that. But to wire money to a place that you never really heard of is pretty crazy. And I get it. And, you know, credit to them. The last 3 months, they opened up a way to do it where you don't have to wire money, where you can come in through crypto, through stablecoins. But there was almost no volume on the exchange. And that was almost the entire time we were trading there. And maybe that changes later on or whatever. But again, our goal was to, you know, get our token traded on a US-based platform because we're a US-based company and it makes sense. And this is the goal here, right? To get everyone to be able to purchase this thing if they want. And, yeah, I said, Merge is an awesome company, awesome exchange with a team I really respect. And it's an exchange. So even though it's in the Seychelles, this isn't like some BS company. I mean, the same rules apply to them as if you go on IPO on the NYSE, fully licensed. But the compliance, the data, the stuff we had to go through to get listed there was insane. Which is great, right? I mean, it's a good thing since this is crypto. I'm skeptical, and you can't blame investors. They want as much transparency as possible. So it's a good thing for people who are doing the right thing and have good structures like ourselves. But again, it is a foreign exchange. Now, if you're looking at the US-based rules, over the past 12 months, they eased tremendously where you're seeing a lot of new security token platforms being launched. And tZERO, being the early adopter here, first of the party, is now starting to list security tokens like crazy. Started with Exodus a few months ago, which tens of thousands of accounts came over to them. More and more accounts are being open on tZERO. That's how you trade these tokens. And tons and tons and tons of security tokens are in the pipeline. Now, I was on the podcast last week and the week before when Daniel took over and did a fantastic job for me. I went to a conference in the Bahamas, and I was asked to speak about security tokens and about our token and how we launch our STO to basically some of the largest financial publishers. And we were the smallest there. These are companies doing over 100 million in sales. We're doing a lot less than that, right? We're growing. I want to get there pretty soon, hopefully. A few years, we'll see if everything goes as planned. But it was amazing that we took center stage at that conference. And the presentation, and it wasn't even a presentation, I just got up and started talking about it for 30, 40 minutes. After I was done, the amount of questions that everyone was asking, this is like 25, 30 people. Again, these are the largest publishers in our space, different divisions all over, and people who I know, just a nice industry conference where we're all talking about trends and things like that and how to get better and stuff. Again, we're competitors, but, it's really cool to get together with all those guys. And you get a lot of people who I respect in that room. And this is my first time invited to this conference. It's been going on for a while. And the questions and the interest, I was up there for at least another 20, 30 minutes. Tons of questions. Holy cow, how did you do this? This is awesome. How could we do this? And 5 different companies came up to me right after the presentation and said, look, we want to learn more about this. How can we use this strategy to help raise money for ourselves, grow our businesses? And for me, when I take this very seriously, so, I don't want someone who's looking to exit their company do this. No, this isn't an exit strategy. Just someone who believes in their company, wants to raise money and build their brand. You do that from acquiring companies, you're using your stock, and you can be like a publicly traded entity and use your stock just like a public company would do. If it goes higher, you could raise money. The marketing campaigns or to build the company even further, hire great talent, have options surrounded around that great talent where they'll participate as you grow And also, you can use your stock as currency to acquire companies that are pretty much 5 to 10 times larger than us, which we wouldn't be able to do. So put us in a great place in terms of being able to compete with the big guys, which is very difficult to do when you're a small business. And the interest that I saw there was unbelievable, because I've had these presentations before where I've got up and spoken, people are interested, but not this kind of interesting. And it makes me think that we need to tell the story better of what security tokens are and why this is going to be one of the biggest industries in the world. You're going to see massive demand. We saw that, and we're seeing it now. But just the demand was there. Just the regulation wasn't there. Now that those, everything kind of have a structure in place, still we want the SEC to come out and make it even more clear. But you're seeing a ton of these platforms being launched now, and more companies taking this route. But we need to tell this story, because everybody I tell this story to is fascinated, absolutely fascinated, because every company in the world is looking to raise money. Every company is, right? You want to grow your business. That's every company. It's like marketing, the ultimate secular growth trend ever. People are going to pay to market their companies. They want to raise money. It's very difficult to raise money unless you have an amazing company that's generating a shitload of sales, and that goes directly to the Goldman Sachs and Morgan Stanley, stuff like that. What if you have a growth company where, you're doing 3 million to 10, 15 million in sales? It's not easy. You might be able to get investors, but those early investors, they're not really interested in the long term of your company. They're interested in, how am I going to get my money back immediately and make 5x, 10x my money immediately? How could I do that? So they're going to come in, take a board seat, and they'll write you a check for 5, 10 million. That's all cool until they're basically, running the show, running your company. The culture changes immediately because they're not used to the culture, right? They're just looking to get in. How could I make this the most exciting as possible by the time we launch and make a shitload of money for ourselves? And then we're out and we'll go to the next company. That's what it is. That's what it is for a lot of these companies. And look, when I started this thing in 2018, here's what I saw. I saw a way to raise capital by selling off a piece of our company, Curzio Research, which a lot of companies, especially private, don't like doing. But it's going to inflate your valuation tremendously because you're a publicly traded company. So you sell a portion of it. And this will get investors direct equity stake in my company. I'm not talking about, if you buy our token and you see it with security tokens, it's backed by an asset. And if we generate profits, most small companies aren't going to generate profits for a long, long time. That's fine. A lot of that money needs to be poured back into the business. I mean, we've seen AT&T get nailed today because they cut their dividend. I mean, they're going to save $5-6 billion, still have a 3% yield instead of a 7-8% yield, which was already on the table, and it's not getting nailed today. But now you're going to throw all that money into growing streaming, growing your company, buy more 5G properties, Spectrum. These companies are going to be generating $25 to $30 billion in free cash flow. So yeah, people are pissed off right now about the dividend. I get it, but holy cow, that's what you want to do, right? They're a growth company now. They're into streaming now. Discovery is, and they're the second best platform behind Netflix, much better than Disney Plus, and their content is great. Getting back to the token, and this is going to give investors direct equity stake in my company. Again, not percentage of profits. As we grow, you grow. And our original investors, where we did a Reg D filing, so it's only available for accredited investors, will be able to trade their shares and their tokens after 12 months on an exchange or alternative trading platform. Think about that for a minute. It's pretty significant, given the average liquidity period for a private investors is 7 years, meaning it takes an average of 7 years before early investors could cash out, which would be through an IPO or if the company was acquired, stuff I mentioned to you in the past. Let me get more into detail about this and why this is important and why security token is going to be one of the greatest markets in history. And it's so super early. 7 years is a very, very long time. A very, very long time. Which is why you saw the explosion in SPACs and their popularity. It's been a bull market, a super bull market. Would the market go up an average of like 22, 23% over the last 3 years? Which is, 3x more than historically? Got the government flooding the markets with money, liquidity everywhere. Easy to raise hundreds of millions of dollars. Pretty easy. You can raise $10 million for almost any project you want right now. Not right now. Interest rates going higher, different environment. But you're looking at 2020, 2021, go back 2019. So now we have these SPACs and the explosion. SPACs were popular at the time, then weren't popular anymore. Why did they become popular again? Here's why. Because the main investors, the big investors, large hedge fund managers, billionaires, celebrities, Ackman, Chamath, Branson, Alex Rodriguez, Jay-Z, all found a quick and legal way to get rich quick, right? To get rich as fast as possible. This is how you do it. It's basically a scheme. It's legal, but they found a way to bypass the system, and that's why you're seeing so many SPACs being launched. Now, there was 59 SPACs launched in 2019. That amount surged to 248 in 2020. See the popularity. And last year, 2021, and it slowed down tremendously towards the end of the year. There's a reason. SEC came out and said you have to disclose a lot more stuff. But over 600 were launched last year. Okay, that's from 59 SPACs in 2019 to over 600 in 2021. And that 600 accounted for 60% of the total new listings, including IPOs, launched last year, which they raised around $160 billion. And this broke records in terms of number of deals, amount raised, which dates back to the 1990s. Holy shit, 1990s. When you see shit broken, it's like, hey, we did this in 2007, 8, 10, 11, whatever. 1990s. That's how hot the markets got for new listings. And why did SPACs get popular? Because it provided a way for institutional investors and insiders to cash out early, where they create this blank check company, which is listed on an exchange, to holding company. Be listed there for whatever. They say like 12 months, 18 months. I think you have up to 2 years. Some of them say 6 months, usually like a year, to find a company that they're going to merge with, they're going to purchase. And they wait until they find the perfect name. And once the stock begins trading, they're allowed to dump their shares pretty quickly, sometimes in a few months, sometimes even shorter durations based on if their stock price went higher, which was the case with DraftKings, one of the early ones. Where insider lockups, I think, were shortened from 180 days to maybe 2 months. It's based on where the stock price went. And the stock price took off. It went to over $65 a share. That shortened the lockup period where insiders were allowed to dump. I think it was September and then October 2020. Look at the chart. No coincidence. The stock crashed, cut in half almost immediately. Then that was early on. I believe that was 2019. So it's 2020. And then 2021, it still was hot, the SPAC market, and that stock went up again. But now it's trading in the low 20s. $65 a share. Now, the best part of this, which people don't explain, and I'm going to show you why this is such a boom to the security token market, is these insiders get super cheap stock, sometimes in the pennies, 50 cents, $1, even $3 to $4. They're also issued a shitload of warrants that they were not required to disclose in their filings. Think about that. These warrants, as the stock goes up, and the stock is probably going up, so if they're selling it or they're making these pipe deals and they're saying, hey, you can come in at 4 or 5, and we'll give you a bunch of warrants that are exercisable at 7 or 8, these things are like at 13, 14 coming out. They're almost able to immediately convert the warrants and sell them. So they made an absolute quick fortune, which is great for these guys. Now, in order for this system to work, you need a bunch of suckers. And that's you. That's you. Retail investors. And I'm not putting anyone down, but I'm saying that's what Wall Street does. It preys on the weak who don't understand. Now, what don't you understand? You don't understand that these guys are going to get you super excited. They're going to take over a company that's either involved in space, crypto, AIs, EVs, data analytics, crazy ESG technology, carbon credits, all the nice buzzwords, do a big roadshow, get you excited, and they know that the retail investor, they're going to invest with emotions. They're not going to look at the valuation of this company. They're not going to look at the valuation that this company was $300 million and 4 months ago, but now they took it over as a SPAC, raised money, and now the valuation's $3 billion. Nobody's going to pay attention to that. What happened in those past few months that increased the valuation 3x, 4x, 5x? Nothing. It's a roadshow. These guys are great. That's what they want to do because their lockup periods are short and they got really cheap stock. Then they tell that great story, and it needs to be great. Again, the fundamentals in these companies are insanely rich. It's like buying a Snickers bar for $500, but nobody cares. Going to space. We're going to space. Carbon credits. AI. Wave of the future. Robots. Whatever. So now they launch these things at a price point of $10. That's where it starts. And now it's a company they're buying, which helps the stock run up 30 to 100%. That was the model. That 30 to 100% run up is you, retail investors. That's the liquidity event. You want to create a massive liquidity event. Liquidity event is tons of Shareholders coming in because you need the liquidity event in order for these insiders to dump the shares right in your face. So that liquidity to all insiders, right? Billionaire celebrities, that's what SPACs create, to dump the stock right in your face. And quick note here, I said the liquidity period is months. However, the clock starts when you create the SPAC. So if you have a 6-month hold period and it takes you 7 months to purchase that company, by the time it gets traded, you could sell on day one. Pretty crazy. So you're a SPAC, you're sitting on exchange 6 months before announcing a deal, your lockup period already expired. You can sell the stock almost immediately, convert the warrants, and sell it. This is the formula. And this formula is absolutely fantastic for institutions. Get rich quick, get out, and then go on to the next SPAC. That's what these guys done. While retail investors, you get left whole in the bag. Black Sky, Momentus, Spire, DraftKings, Virgin Galactic, Beachbody. Draw down more than 60% from their highs. In fact, the average SPAC is now trading 60% below the price from when they first started trading to the public. People got wrecked on these things. And it makes sense because they inflated these valuations and dumped the shares right in your face. But this is the reason behind SPACs and why they made a monster comeback. They're like, holy cow, we're going to be allowed to do this and just let's murder these retail investors. They don't know better. They're not going to really look at valuation or anything. They're just going to get excited about the story. But the biggest investors are able to shorten their liquidity periods to where they will launch a SPAC, acquire a growth company, and sell out a big chunk of their positions, 5x to sometimes 20x, even 50x gains in less than a year because they're sitting on cheap stocks, sometimes under $1. Somebody owns that stock. But now the gig's up. The SEC came out and said, we want more disclosures on these. Notice how SPACs are not coming out as much anymore. Plus, you're taking liquidity away, which is a big deal for crazy situations where Rivian could generate $1 million in sales and have a $100 billion valuation based on future growth. I could see 20, 30, 50 billion. I think they have the best technology in space, but 100 billion is a little bit of a stretch, and that stock's cut in half. That's why SPACs are not popular anymore. But last year, another new trend surfaced, which was even a bigger slap in the face to retail investors. Getting to the point here why security tokens are going to be a monster industry. So the trend that surfaces direct listings. So in a direct listing, the company sells shares directly to the public without the help of intermediaries like investment banks. So no traditional underwriters involved. And investors love this because they hate Wall Street, and this works for companies that have massive platforms and massive people that use their products. So if you have millions and millions of people, you don't really need, right? That's what the investment banks bring to the table. They bring all these investors, big investors, but if you have a massive file that loves your company, has been using it for 10 years, you can raise money on your own. And we raise money on our own without institutions. Not direct listing. I mean, if you look at direct listing here, now it's selling these shares to investors on day one. I mean, you have Coinbase took advantage of this, so did Robinhood. But companies with big client bases, again, can do this since they have that massive platform of investors that will buy this. So Coinbase was a pure direct listing. Robinhood was an IPO, but created something called IPO access, where they took a percentage of that float. And if you had an account on Robinhood, you could buy these shares on day one. And you don't have to be accredited, which is cool. It's cool for Robinhood to sell non-accredited investors because these are investors who aren't used to this system. And they're like, holy shit, IPO, I get to buy Robinhood a little bit before everybody else. That's great. I don't have to be accredited, right? I'm an insider now. And there's no minimum of shares you need to buy. So you could buy 10 shares, 50 shares, 1,000 shares, 10,000, whatever you want. Sounds great at first. But wait a minute. Because you do a direct listing instead of an IPO, this allows insiders to have no lockup period. They could sell on day one. And what's day one? Day one is the day that the most excitement takes place. And likely the highest point your share price is going to be. Because of the valuations that these things have come out with. Not normally, you see Microsoft, Google, the $1 trillion companies go higher and higher, NVIDIA, get it. But the valuations that these companies are coming out at is anticipating massive growth for the next 25 years. That's how high these valuations are. But these insiders get to sell on day one. So if you look at Coinbase, Coinbase opened up 250, went to 350 in a few days. It's now into 200. A lot of insiders cashed out. Lots of insiders cashed out. Robinhood surged to over $80 a share within a few weeks. The excitement wore off. Now the stock is 12, 13. Can surge to over $80 a share. Day one. That's the day where everybody went. That's the liquidity period. All the volume. Makes it easy to dump your shares. Now, where I'm going with this, if you could find a way to invest super early in a company and shorten that liquidity period for investors to where they could sell their shares pretty quickly and not locked up for 7 years, it creates an enormous market. Massive, massive, hundreds of billions of dollars. We've seen it with direct listings. We've seen it with SPACs. However, these vehicles, special listings, they were created, excuse my language, to fuck you. That's what they're created for. Make institutions, billionaires, even more effing rich by taking full advantage of you. And nobody's looking out for you. Crazy. When you know the full story. I bet you didn't know. I hear so many young investors buying this SPAC. This SPAC is awesome. This is great. Yeah. But you don't even know the fundamentals. The insiders are dumping in your face. And we saw Chamath and Richard Branson go in front of the New York Stock Exchange telling space travel is great. And the stock was what? At Virgin Galactic was at 10? 12, 15, then went higher, 20, 30, 40, kept going higher and higher and higher. These guys like, this is great. Well, now they all sold out, made hundreds of millions of dollars for themselves. And now the stock is what? I think it's below 10 again. I mean, Chamath is promoting the shit out of it at 17, 20, 30. You would think he would buy more here. No, he's not interested in buying more. He got his money. That's the point. Now into security tokens. Security tokens are not just great for the issuer, like us, Curzio Research, who saved boatloads on fees to raise money to help grow our business. No investment bankers are involved. Legal costs, accounting costs were like 10% of you would pay in traditional IPOs. I would say paid about $300,000, which sounds like a lot, but a lot of that takes place after the capital raise. So you put up the money, you raise capital, and some of that is going to be allocated to legal and stuff like that, right? Because you're growing the company. Especially as that lockup period ends and you're actually going to be publicly traded, where retail investors could buy your security token on, I can't tell you how many new security token exchanges and platforms are popping up in the U.S. I'll get to that in a minute. But that's great. Again, it seems like a lot in cost for a small business, but a lot of that can come after the capital raise. Because once you go, that's where the IR department, everything, right? You have to get everything locked in, talking to the alternative trading platforms where you're going to be traded, more lawyer stuff, but much, much, much cheaper than going traditional IPO. But it's also great for who? For you, the retail investor. You get equity stake in my company. You're investing in the ground floor, and it's risky. We're a small cap. Maybe I don't make it work. Maybe we have a setback. Maybe people stop buying financial newsletters. We're not able to innovate anymore. Maybe. That's fine. But at least you're in at a price where if this thing does work and we turn this into $1 billion company, you're probably going to do very, very, very well. Because it's going to be reflected in our token, which is a direct equity stake for you. So early investors can sell their tokens after 12 months. And after that 12 months, any retail investor can purchase our token, which you could do by signing up to tZERO. You have to go to tZERO, just like if it's trading on, Gemini only or Coinbase. Some of these utility tokens just trade on regular exchanges. But guys, that's how you disrupt markets. Not providing something that's just great for your business, for you. The reason why everybody hates Wall Street, because all they do is fuck people over and over and over again. Give the analogy. Listen, they'll take everything from you. You'll be sitting there naked in the street with a sock, and they'll take that sock off. They'll leave you dead in the street. That's Wall Street. There's no messing around there. The reason why all these billionaires rush to get those SPACs out. Holy shit, these people are actually buying this garbage? Come on, we can make a fortune off this and sell immediately. And it worked, and it was legal. But if you want to disrupt markets, this can't be just good for you. It's got to be good for everyone involved. Something that benefits every party involved. That's why Uber was great. Amazon. Look where that company went just from selling books to where they are now, providing an amazing experience. Look at Netflix. Again, providing experience or product that benefits all parties involved at a much cheaper cost to everyone. And that's why I'm predicting within 5 years, you will see hundreds of thousands of assets tokenized. It's why you're seeing lots of new security token platforms come to market right now. It's why Gemini, which you're very familiar with, just announced the approval from FINRA to launch their Gemini Galactic Markets platform to trade security tokens. It's why Coinbase in 2018 took over 3 separate brokerage firms for their licenses, which is going to allow them to trade security tokens. may seem a little weird. Why is Gemini and Coinbase, two massive utility crypto trading platforms, massive volume, why are they preparing to launch security token platforms? Because they have to. They know that almost every name trading on that platform right now, these utility companies, 99% of those utility tokens are securities. The SEC knows this. Everybody knows it. Fits the perfect definition. And they're eventually going to regulate these names as securities, which is going to result in thousands of these coming off US-based platforms and then going to Binance or other international crypto platforms. So how are these guys going to make their money? Security tokens. Makes sense. Checks off all the boxes. There our token is CEO. We're changing the symbol to CRUZ when it trades. CURZ, Curz, sorry. I didn't want to... We need a 4-letter symbol, so instead of 3, I like CEO a little bit better, but, you know, I didn't really want Curz, CURZ, but it's an easy transition where people will be able to find it, especially those investors and stuff. So that's what it is right now. It's going to be. And it's going to begin trading next week. So discussing the exact date. Once I know, I'll let you know. And the way to trade our token is through tZERO, which has been a really, really awesome partner for us, guys. Just an amazing partner. And they've done a due diligence to make sure we have no hiccups launching. Worked together for the past 9 months to make this happen, back and forth, and legal teams talking, and everybody. Just the communication's been great. Love the process. This wasn't like, let's rush it out. No, let's make sure. This is something that could be very, very big. Let's make sure that we're able to launch this thing. And there's no setbacks. There's no anything. I don't know where it's going to come out. I don't know what it's going to do. I'm just saying that, you know, we want to make sure that it's a fair market for anyone to trade. And we want to launch it where there's no bugs or anything. And they've been fantastic partners. Really exciting times. We're launching this thing. Finally. But that's the difference. This is why I'm so excited about security tokens. And I had my doubts. 2018, back and forth, going, holy shit. And then COVID hit. I'm like, how isn't this market taking off? It makes sense. It eliminates the middleman, which is the investment banks, who are make tons of fees. They do lots of great things, investment banks. But they're making fees by saying, hey, you got a really good company. We're going to introduce it to these people and do a roadshow for you and make whatever. That could be as high as 6%, even more, depending on if it's a small cap. I mean, large caps, maybe 3% of the float. And they get shares that are dirt cheap. You'll see them in Goldman funds and Morgan Stanley funds and things like that. You're able to eliminate all that BS. And for investors, you get to buy in to equity stake into a company at the very, very super early stages, which you really can't do anymore in this market, which is known from SPACs, direct listings. And look how much investors I got fucked through Robinhood, Coinbase, and so many of these SPACs. So many of them that a lot of these investors who created them aren't even in them anymore. They're not even in them. But you are. Oh, I thought we were sending people to space. How many spaceships do you think are going to go? How many people could fit on a spaceship to fly around space? How many? Maybe you buy bigger rocket ships or build them and maybe you get, 50 people or whatever. How many times are you going to go to make the revenue to generate to support a $25 billion company? Are you kidding me? When is that happening? But it's insane. People don't care. They want to look at things. They're just like, whatever. But here's what I see with security tokens. I can't tell you. Been around so many trends over the past 20 years, seeing them develop, studying them. And sometimes I'm investing in things too early. That's my biggest flaw, is seeing something going, holy shit, this is going to be great. And I invest in a lot of these things early. And sometimes it takes a little while to develop. Then all of a sudden, doing a podcast with 2 or 3 people in a financial industry 14 years ago doing a podcast, now the whole entire world has a podcast. Launching one of the first ever security tokens. Now you're seeing tens of thousands, if not hundreds of thousands of people start going on platforms and alternative trading systems so they could trade security tokens. You've seen a ton of these things in a pipeline. It just makes sense. It checks off every single box. It's just a story that we need to tell better. More exciting NFTs, which continue to soar in terms of excitement. See, some of the prices come down on the garbage, but when it comes to investors and you're tracking crypto trends, NFTs have never been more popular than they are right now. Extremely, extremely popular, launching like crazy, a big part of the metaverse, and it's more than just selling your art. It's ownership. People want ownership, equity. security tokens, non-fungible tokens. This is what they want. It's a great time for individual investors, but this checks off every single box. Excited about the industry, excited over the past 9 months, 12 months, the amount of news that is coming out. Go on Google and search security tokens and you'll see it for yourself. Even some of the biggest crypto exchanges, they understand. They have, if you look on their boards, they all have SEC people on there. There's a reason why they're all purchasing assets that are going to allow them to trade security tokens. These guys are already inside. They know, they see it coming down the pipeline. And the SEC even said, these are securities. And pretty soon they're going to put it into law. And when they do, that's when these platforms are going to go to security tokens. We're going to have a massive, massive head start on so many businesses. So really exciting times. I want to thank all of you that helped me get to this place. If you want to buy it, buy it. There are risks. However, at least if we're not getting it done and you're seeing our financials, you get to sell the thing, which you should have the right to, which early investors should have the right to, if they want to. And that's fine. But it's better than waiting 7 years in a private company. That kind of sucks, right? Where year 3 and 4, you're changing a business model because you're not getting any customers. It's not working anymore. You got everyone who knows you on your platform, but you're having trouble growing outside, introducing your company to people who never heard you before. That's the hardest part. We're really scaling, growing a business. And sometimes it happens through word of mouth or whatever. And sometimes it doesn't, and then you're stuck. I mean, imagine having, like, say, $100,000 to invest, and you want to put in 10 companies, and you put it like 5 or 6 private companies, 60,000 of that is locked up for 7 years. Could be 10 years. Could be 3 or 4. You don't know. Security tokens, at least after 1 year, and if these things go higher, you could sell out, right? Sell half of your position if they double. Now you could take that and put it into other outlets, other things you want to invest in. That's the point of this. Checks every single box. But really see it get off the ground over the past 9 months. Again, my biggest mistake is being early to all these trends, going to Consumer Electronics Show and having unbelievable contacts over the last 10, 15 years that helped me tremendously to see these trends develop. They all have the same thing in common. If you look at the biggest trends, they're good for every single party involved, and they make business better, faster, cheaper. And that's what security tokens does compared to every other outlet. But this is an outlet that's for retail investors, just like crypto, retail investors. Wall Street late to the party. This is what you want. This is what DeFi is about, decentralized finance. This is why everyone's hopping into crypto, because they know, holy shit, those massive fees that we charge, credit card companies, processing, investment banks, holy shit, they're on to us. Just like Robinhood disrupted the entire online banking industry. Now you don't have to pay for trading and those fees, all because of Robinhood. Make something better, faster, cheaper. That's how you scale. That's how these trends get massive. And we're in a very early stage security token. Glad we're launching next week. When I've had the final date, I will let everyone know. You can go to our site, CurzioResearch.com. Any questions or comments, send them to me, FrankCurzioResearch.com. Any potential new investors have any questions, send me an email. Any current, which we've been talking to, tell them how to transfer their shares and, you know, from Merge to Computer Share, which is our transfer agent, to now getting on tZERO, where you're going to be able to trade them on day one. That's like a 4-day process altogether. So if you are a current investor and haven't signed up for tZERO, do that right away. It's quick to sign up at tZERO, but you link it in. We're going to help you with that whole step for where your shares Computer Share. You get the approval for tZERO. Could take like 2 to 3 days for all that. Not to open up an account. It takes less than 24 hours to open up an account, usually very, very quickly. But for those of you who have owned the security token already, and you had it on a Merge Exchange or whatever, now it's at Computer Share. Reach out to us if you have any questions or comments on how to do that. We've been sending emails explaining exactly how to do that. I want to make it as easy as possible if you want to trade. And again, there are risks. We're a company. We're small cap. It's really fun times. And just excited to finally get this thing launched. So guys, that's it for me. Really, really appreciate all the support. And I'll see you guys tomorrow. Take care.